Hi, welcome back to We Hate Insurance, where we're going to talk about why you hate insurance and why maybe you shouldn't, or maybe you should. Today, we're going to talk about life insurance and why you don't need it. Um, there are some people that don't need life insurance, and you'll probably be surprised about who those are. We'll start, I get people in my office all the time that are telling me, Jason, I don't need life insurance because, well, I've got money in the bank. Another really common one is my spouse can sell the business. If I died, my business is worth quite a bit of money. They can just sell it. They'll have plenty of money to live and plenty of money to bury me, and man, it'll all be good. Um, so we're going to talk about why some people don't need life insurance, and we're going to talk about those kind of excuses. But before we get started, as always recommend that you find a licensed agent in your state to guide you through insurance. Insurance is a moving target, and there's a broad variety of types of insurance. There's insurance for automobiles, which is different than property insurance, which is different than life insurance, which is different by far than health insurance. So the different types of insurance that you might need that might make your life better, um, you need a guide. So find yourself an agent that you can trust, somebody that you don't mind inviting over to a barbecue on Sunday. So let's get started. Who needs life insurance? Life insurance is a pretty old concept. It comes from Greek and Roman times. Generals would go on battles, and some of their soldiers would not make it back. And some of those soldiers were married and had children, and the generals felt compassion and a sense of duty. So they, and in those times, soldiers were paid by whatever booty they could gather after the spoils, after war. So they called that the spoils of war. And so everybody would give a little portion of the spoils of war for those who had fallen. And then the general would divvy those out to the widows and the children that were left behind. Noble concept continues on today, but today it's a contract. It's a contractual obligation by one company to an insured person who is going to divest themselves a little bit of that responsibility for the end of life expenses. And in return, the company gets a premium to guarantee that those end of life expenses will be there. As a contract, there is a start date and an end date. There is what's called remuneration. That's money exchanging hands. Who needs life insurance? Well, a lot of people. In fact, most people. Um, I will tell you that some of the options I presented in the opening are not viable options. So if you own a business, let's say, and you're talking to your insurance agent, they say, "Hey, what about life insurance? If something happens to you, would your spouse be able to continue the business?" No, they can't continue the business. Let's say it's a carpet business, and you're in a medium-sized town that has 4 carpet companies or flooring companies, and your carpet or flooring company is the biggest of them all. It's the best. It's got the most clientele. It's got the best contracts with the best brands. It's got the best location, and it's doing the best financially. So then you die, and your spouse is just mildly involved in the business. Perhaps they do the books, or perhaps they, help with aspects of marketing. But you're the real face of the business. All 3 other competitors in town are going to know that you passed away. So when she puts that on the market, or he puts it on the market, then those other flooring companies are going to be the primary purchasers. What do you think they're going to do? They're not going to offer you top dollar. Your multi-million-dollar business is going to go for pennies on the dollar. Your spouse will likely spend months negotiating, trying to get a better price, and the price will continually go down. Every month that you're not involved in the business, the value will go down. And every month that they get more desperate to pay the bills that are mounting up, the price will go down. So with that in mind, having a business that you can sell is not a viable option to protect your family. Your children will need to eat and have school clothes. Your spouse is going to need to eat and pay the mortgage. That has to go on. So there's an immediate need for cash. I'm sorry, selling assets does not work because you'll get pennies on the dollar. Everything you worked for your entire life will go down the toilet in a very short order, and your spouse and family that remains, they're not going to be any better off. In fact, it'll be agonizing and it will cause a lot of stress and anguish. And don't shoot the messenger here. I'm just telling you what I know. Now, the other most common statement that I get whenever I'm talking, especially someone who's a little older, maybe closer to retirement or maybe after retirement, post-retirement, and they're like, I've got money in the bank, Jason. They can just take that out and bury me. I don't have any debts left. I'm good to go. So that only works if the people left behind are owners on the bank account. And don't take my word for it. Call your bank. Call your bank and say, hey, if I die, who has access to my bank account? They're going to say every other owner. That'll be their, that'll be their answer. Well, what if you don't have another owner? Well, then it goes through probate. That means the government decides who gets your bank account after you're gone. Okay. That usually takes, depending on the state, anywhere from 6 months to 6 years. And I'm not exaggerating. Probate can be a lengthy process. So if you have money in the bank and you want your heirs to have that money when you're gone, you have to make them an owner on the account. You can't just be a user, because as soon as the bank sees your name in the obituary, as soon as they get word that you have passed on, your bank account will be frozen to everyone except the other owners. And if they're not owners, doesn't matter if they can sign, doesn't matter if they're users, doesn't matter. None of that matters if they're not an owner on the account. So all that money you got stockpiled in the bank account, not going to do anybody any good, except to pay any debts that your estate owes through the probate process. Even if you have a will, there's no guarantee that that will can be executed efficiently to get money that is not liquid, that's in the bank account, out to your heirs. Even money that is in cash form in your house somewhere, still there's a lot of risk with that. So, who doesn't need life insurance? Well, I had a mentor who once told me that if you don't owe anybody or love anybody, you don't need life insurance. That's the truth. If you don't love anybody, what do you care? What do you care what kind of debts you left behind? What do you care how much it costs to bury you and who has to pay for it? If you don't love anybody, you don't need life insurance, period. If you're in that position, God love you, you don't have to have life insurance. There's no reason to have it. Don't waste your money. And tell your agent up front, nope, I don't love anybody. I hate them all. I guess you don't have to hate them. You just don't have to love them. Now, the other person, this person that doesn't owe anybody. If you don't owe anybody and you don't love anybody, then you're good to go. And you can laugh all the way to the bank until you pass, and then all your assets will be divvied up amongst whoever's left. But if you love people, you want to make sure that you leave this plane of existence without burdening those that you leave behind. So there's two types of life insurance to consider. One is permanent life insurance. That is if you have, if you're looking at life insurance you want to keep until you die, so that your loved ones don't have the burden of paying for your final expenses. or perhaps you want to leave a legacy. So that's typically whole life or universal life. These are policies that you can keep throughout your entire life. Whole life has guarantees on everything. Universal life grows a little bit faster, but it's a little less guarantees. We'll talk about those in another format. There's a lot of different methods. You can do a monthly payment where you can set it up to that big chunk of money you got in the bank that you said you could use for burial. You can set up a stipend that comes out of that bank account to pay for this life insurance, or you can do a lump sum transfer and increase the amount by 20, 30% sometimes, depending on your age and your health. But that's not, I'll talk a little bit more about term insurance, which is temporary insurance. It's for a term. Term is a period of time, start with finish. That's the most common. If you have debt and you have a loved one and you want to make sure that they're not burdened with that debt, let's say you have a spouse and children and a mortgage and you're the primary breadwinner, or you have a business that depends on you daily and is the driving force in the business. That life insurance would be term insurance because you're not going to need it forever. Once you've got money in the bank, you can buy permanent insurance and you can offset it with other instruments to transfer that wealth and that money. But when you've got that business that you want to sell, or you've got that income that your spouse is not bringing in, then you'll need a term life policy. And you see it online all the time. You can get term life for what, $5 a month, or a $5 million policy for $20 a month, and a 40-year-old man. Can you trust that? Well, no, is the short answer. How can companies offer $5 million of coverage for $30 a month on a middle-aged man? Well, realistically, the devil's in the details. You go through a process called underwriting. Underwriting is the process where they determine if you're qualified for insurance, life insurance. If you and if you do qualify for life insurance, how much should they charge? So underwriting looks at your demographics. How old are you? What's your gender? Uh, you know, what's your medical history? Uh, what risk categories do you fall into? And then they determine if you qualify. Lots of these companies that offer these insanely low rates online with no agent involved, typically they do very limited underwriting. They ask you broad questions, that are like, oh, what about, have you ever been diagnosed with, a digestive disorder? And you're like, oh, no, I don't. Forgetting that 10 years ago you had GERD or you had gout. Not a big deal, not life-threatening, not going to reduce your longevity, but you don't disclose that. No problem. They're not going to say anything. The fact of the matter is, according to, I got some statistics. According to Penn State University, the study they did some time ago, they found that term life insurance is only held by an individual for an average of 2 years. 2 years. So that's all the risk that the insurance company's got. It's 2 years worth of holding on to that. If you don't die in that first 2 years, they're good to go, right? Because on average, you're going to let it lapse or you're going to cancel it. And there's a lot of reasons for this. People get, money crunch. They forget why they got it. They don't have an agent, so there's nobody reminding them of why they had it. There's nobody taking notes and saying, "Oh, well, what about this? You need this. It's important, and here's why. And here's when you can get rid of it." 72%, according to this study, 72% terminate the policy within 3 years. And now you're going to say, Jennifer, why is that important? What does that mean for these shady companies that offer this online for very little money. It's because of something called the contestability period. Life insurance is a contract, remember? So in all the contracts, you have a period of contestability with life insurance. The main period of contestability is 2 years. Every state except, I believe, Missouri has a 2-year contestability period, and Missouri's is 1 year. What that means is if you die and you take advantage of that life insurance contract, or your heirs take advantage of that life insurance contract before the end of that 2-year period, the life insurance company has the right to go back and review all the underwriting and all the medical records and everything that has to do with that application. They will ensure that no one made any mistakes. They will ensure that you didn't fib or omit any underwriting facts. That means that GERD that you forgot about, or that like Crohn's disease or whatever it was that you had 10 years before, but haven't had any issues with and totally forgot about. They'll be like, oh, they lied. They did have digestive issues, and it could have been a contributing factor. Because you lied on the application, the contract can be considered null and void. They will then return the premium that was paid with interest to your loved ones with a nice little note that says, sorry. And also, if you pass during that period of contestability, typically the company will do that research and it might take 2 or 3 months. So you lose a lot of that benefit of getting that initial bump of money. And I say this because that is how the company operates. That's how a life insurance company that is operating solely online with no agents, with no mandate for accountability, and offering these really low premiums because they know they're going to get away with it 99% of the time. And if they have to pay out once, then that's okay because they've made tons of money off of the investments that they've used other people's money on, and it's all paid for itself. This is common practice for online companies. So when you take out a term policy, do yourself a favor, get an agent. I don't know. Look it up in the phone book if there's phone books anymore. Google them. Talk to a friend. That's probably the best way. Talk to a friend who had a good experience with somebody. Find an agent. Go and talk to them about how much you need, what type you need, and um, you know what the risks are. And those agents, whenever you say I didn't have any digestive disorders, they're going to say, "Are you sure you didn't have GERD?" They're going to say these kind of things. They're going to pull out of you the information to make sure that that life insurance contract is in full effect and is not in jeopardy if something happens to you during that contestability period. So there you have it. People that don't need life insurance and people that don't love anybody, don't owe anybody. If you fall into either one of those categories, then life insurance is probably for you. If you have a big chunk of money that you think is going to bury you in your bank account, call an agent, talk to them about your options, putting that into life insurance. It transfers immediately to your heirs. It's immediate access, no probate, no reading of the will. It just goes straight to them. If you own a business, talk to them about key man insurance, which is it's gonna pay your spouse or your business partner and make sure that everybody's got what they need to keep that business going and keep it valuable so that you don't lose or your family doesn't lose all the equity that you built into that business over years and years. And so talk to an agent, talk to them about strategies on using that. We'll get into that more, but there you have it. If you don't love anybody, you don't know anybody, you don't need life insurance, and you heard it here first. Take care. We'll talk to you again soon.